My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After a fairly sedate day, Dow dipped 52 points, S&P basically flat. Nasdaq advanced 0.07%. I need you to remember something. The best stocks, they're never cheap. They rarely come in. And when they do, you gotta be ready to pounce! Buy! The good news? Rarely is not the same as never. Every now and then, you do get meaningful pullbacks in truly high-quality stocks. The bad news, when those pullbacks happen, most people tend to be too afraid, scared to do any buying. And you know what? I can't blame them. Case in point, the stock of Costco. I think the world of Costco. I'm a proud Costco member. Gold star. My wife, Lisa's an executive club member. She lords her status over me. Every time I shop there, I'm blown away by the low prices. In fact, I'm a two-cart kind of shopper. The bargains are so great, one cart's not enough to contain them all. We're like a train when we go there. We buy Costco's private label products. Why? Because they're usually better than nationally branded stuff. The place never fails to amaze. My trainer, Jim, this week he bought a car from Costco. They gave him a better lease deal than anywhere else. Fish, beef, crab legs, glasses, diamond rings, Zegna shirts, you name it, go to Costco. But the stock? Well, the stock, I've liked it for years. But I've always cautioned that it is on the expensive side. We used to own Costco, the stock, for my charitable trust. But, you know, we sold it. We sold it simply because we had a huge gain, and I didn't want to be greedy. Well, of course, everyone has a huge gain. Remember this, bulls make money. Bears make money. But hogs, they get slaughtered. Since then, the stocks continue to climb, and I've never felt like we had a good opportunity to get back in because, well, I mean, you really don't get a lot of downturns here, do you? Today, though, Costco got hit. The first real price break in the better part of a year. Opportunity? It sure felt like an opportunity right until I saw why Costco got hit. Bernstein, good research firm, downgraded the stock from hold, in other words, they missed a lot of the move, to sell in a devastating piece that read so negatively that it could talk even the most optimistic bull out of buying this Costco dip. Have you had their crab dip? Anyway, listen to this litany of woe about Costco. First, Bernstein's worried that the company may be approaching peak club counts, peak members per club, and peak revenue per member. Once Costco hits the saturation point, those numbers could start to deteriorate. Second, they mention a possible downturn catalyst, although they never really spell out what it is. And Costco does tend to thrive in a weaker economy. Third, potential competition. Finally, they argue Costco's expansion into China may not go as well as many people expect, or as the piece was titled, Cost, remember the symbol COSD, Cost, Rational Exuberance, downgrading to underperform on valuation, U.S. saturation, competition, and a slow boat to China. Even worse, their bearish logic is all backed up by charts and graphs showing how Costco's stock is so expensive versus historical valuation on pretty much any metric you care to name. That sounds very rigorous and very scary. While the analyst freely admits that he missed the big rally in the stock, he does that right at the top. I thought that was very humble of him. Well, let's just say his logic sure looks compelling. There's just one teensy problem with this analysis. They make it sound as though Costco has very little control over its own destiny. And that's just not true. Costco is a best-of-breed retailer that has repeatedly reinvented itself. And if they need to reinvent themselves again, that's exactly what they'll do. As a close follower of the chain, I can remember when they initially decided that natural and organic was a fad. They didn't embrace it. Big mistake. And when management realized it, they went all in on natural and organic. They arguably have the best selection in the world now. I can remember when Costco failed to really embrace the internet. It seemed to me that they had contempt for digitalization, and they somehow believed that they wouldn't lose business to more digital-friendly competitors. They love brick and mortar. When they realized, though, they got it wrong, they pivoted hard, and they've become one of the best operators on the web. Some say the ultimate omni-channel retailer. The company's been judicious about raising the price of club memberships, but if they decide they need the money, I bet they could put through some substantial price increases without losing many customers at all. I don't want to say any customers, but many customers. Oh, and as far as the Chinese business is concerned, the slow boat to China, Costco recently opened a store in Shanghai, and it was so swamped with customers that there was barely room to push a cart. They actually had to close up early on the first day because they couldn't manage the huge crowds. Shoppers were literally fighting with each other over rotisserie chickens. Within days, management decided to put up a second one in Shanghai. That sure doesn't seem like a troubled, cannibalized business to me. How about you? So what do you do with a stock like this one? First, you have to accept that Costco's shares will never be cheap. That's why I always tell you to pay up for best of breed. Second, I think the Bernstein downgrade could prove to be spot on, at least for the moment. See, this stock is up 41% year to date. So it theoretically, it's not such a bad idea to say, well, wait a second, maybe take a little profit here. I'd give it a day or two more to make sure all the weak hands get shaken out. After that, though, I have no doubt that Costco is worth buying into a weakness. The stock may look expensive now, but it looked expensive 5 years ago, too. And it's more than doubled since then. That's why I'm unmoved by the valuation argument. Okay, let me give you another example. Mr. Softy, Microsoft. As of yesterday's close, this stock was trading at around 27 times earnings. It's been years and years since the last time I saw Microsoft trading at such an elevated level. But if you sold the stock based on the valuation worries, well, you felt like a dope last night when management gave us a gigantic dividend boost and a $40 billion buyback, even though the company's a $1 trillion company. Oh, it rallied $2.55 today. I'm going to give you another one that I like. We had a caller about it the other day. Wendy's. Yeah, I love going to Wendy's. You know, my wife adores the Baconator. I mean, it's her favorite treat. If she's really in a good mood and has worked out really hard, she has the double Baconator. I think Todd Penegor, the CEO, is fantastic, but the stock recently got hit. And I got to tell you, last night when the viewer called, I almost was like, how did this happen? How could it go down this much so quickly? Oh, the caller's name was Phyllis, just so you remember. I myself just blanked out. But Regina Gilgan, my incredibly smart executive producer, who's got a really smart outfit on, told me this. Okay, anyway, what was Wendy's crime? Do you remember what Wendy's crime was? Defender of Phyllis?
Do I remember their crime was?
Yeah, what did Wendy's do wrong?
Breakfast?
It decided to hire 20,000 people because of breakfast. They wanted to take a hit to earnings so that they could do more business later. What kind of countries does you hire 20,000 people and your stock gets clobbered? That's wrong. Good grief. You know what it gave you? Phyllis, it gave you a great entry point. They're investing in growth, for heaven's sake. That's what I want. Look, I could list dozens of opportunities to buy expensive but high-quality stocks into weakness. In each case, it's easy to say what the Bernstein analyst said about Costco. Sell, sell, sell. But what's really the alternative here? If you're hunting for stocks that are cheap, they tend to be cheap for good reasons. Those reasons rarely change. One of the cheapest groups in the market right now, the automakers. Let me ask you, do you really want to invest in an ailing industry that's facing near-term problems like strikes and longer-term existential threats like ride-sharing? What about another group? That's the brick-and-mortar retail chains that fail the online or off-price tests. The only winners in this group either offer incredible bargains or have incredible digital footprint. The rest, they've been total dogs. I think they're going to stay that way. Oh, you want cheap? How about the steel makers? Even with the tariffs, which is about what you'd expect with a slowing economy. The oils, the horror. Bottom line, the next time some analyst knocks down a best-of-breed stock with a cogent downgrade that's focused on valuation, you need to take advantage of that best-of-breed opportunity weakness, and you need to do some buying. All right, let's take calls. Let's go to John in California. John.
Jim, you know, we love you out here in Sacramento. 10th and P gang is still watching you.
My man John.
Right.
My man John. I'm in old Sacto right now, mentally.
Okay, what we got? I noticed my old buddy Warren Buffett, who has a couple more dollars than me. I see some news. Kraft Heinz is in the news with somebody dumping some. You think he'll buy it up or kind of lick his wounds and hang back?
But you do have a kind of a worst of breed situation there. And other than Cheese Whiz, when I go to Geno's, which I'm going to try to do this weekend, there's nothing there. Let's buy best of breed, not worst of breed. We'll always make more money. All right, look, Bernstein's valuation concerns for Costco, they're logical. It may even be right for the moment. But history tells me that best of breed companies don't trade for cheap. Why should they? Take this dip as a buying opportunity, not tomorrow. Let it sit for a couple days. Let the weekends blow out of it. On Mad Money tonight, it's behind Verbo, Trivago, and its namesake Expedia brand. I'm taking a trip with the CEO of this travel group giant. And Chipotle's up over 90% since the start of the year. Can it still add some spice to your portfolio, or have you missed the move? I'm giving my take. And 5% of the world's oil supply was taken offline earlier this week, but the market hardly even seemed to notice. I'll explain why. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.